turn of the broader market seems to come to the fore, so to say. The jury is split right down the middle about whether large caps and safety will find favor or the others will find favor. Your sense in your note?
I think given all the uncertainty, so there is a preference for the large caps. Remember that EPFO only buys Nifty ETFs. Most insurance funds are more likely to buy the large caps. There may be some who are punting in the small caps, but generally their objective is to be in large liquid names. And the SIPs also tend to be, more towards, in terms of the size of funds going, would be more towards the larger liquid funds. So, meaning not the liquid funds, but larger, AUM funds.
Yeah.
And therefore, the preference for me would also be on the large caps. On the mid caps, I think the advantage is that fundamentally they are less exposed to the world. They are much more exposed to India, and so earnings wise they should be better off. But my apprehension is that at a time of uncertainty, the risk appetite when it weakens, it tends to affect the mid cap PEs a lot more. And so that's I mean, I'm not saying this is the right way to think about it, but from a market forecasting perspective, I can't see any other way to think about it. And also remember that 52% of mutual fund ownership is in the non-retail SIP, non-SIP retail, meaning that 52% of the AUM of about 23 lakh crores in equities is with investors who have made discretionary allocations, lump sum allocations into equities. Now, for many of those, the attractiveness of bonds, or FDs, or real estate, or other asset classes is something that is likely to moderate investment going forward. And it's very hard to sort of triangulate to who exactly buys the mid cap stocks, but this, I think, is the crowd that is a lot more savvy and is invested in the mid caps and small caps. So as they find that other asset classes are becoming more attractive, it is possible that the mid cap, small caps can continue to drift lower, and I would still prefer the large caps.